Property market trends for 2020. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I've got my piping hot stein of coffee and I thought we'd have a look at this article from realestate.com.au to do with property market trends and new development outlooks for 2020 because, well, we're getting so many mixed messages from different reporters, from the RBA, from the government, from world news, and just from experiences and comments that people are leaving here. You know, 1 minute the RBA is saying, yep, it's all going to turn around, it's going to be a fantastic year, so we're not cutting rates, and then we've got tourism declining because of virus scares, bushfires, construction confidence is like plummeting, the PCI is going down, but property is apparently going up. So let's have a look, guys. Let's have a look. 2019 was a tough year for new developments. Well, yeah, from the AI PCI we looked at yesterday, just the decline in the apartment sector has just 22 months, I think, in a row. Not good. So particularly in the higher density space. But the tide is turning as consumers become better educated and market conditions improve this year. Okay, how? I'm just looking here at the side to bring this up, guys, because we've got here construction decline slows. This is a video I did yesterday. Apartments 37, and this is from the Performance of Construction Index. This is showing a sharp decline in the industry, a sharp decline, the high density one. So how can he make this claim? I mean, this was written on the 5th of Feb and some data came out. I don't understand. I guess he'll teach us. He'll tell us here in the article. What do you reckon, guys? Who thinks it's auction clearance rates? Oh, I hate auction clearance rates. The very public issues around cladding and building defects, along with falling property prices and tighter credit conditions, saw an ongoing decline in new development activity last year, and it's ongoing. 2020, however, is looking as if it will be a more positive year for new development sector, although it is unlikely to return to the heydays prior to the recent slowdown. And if we go back, a big portion of that back in the day was to do with this. This shows the foreign investment review. So foreign investment overheated our property sector, guys. It's just that simple. It's just that simple. Maybe all foreign investment in property, here's an idea, needs to be paid for in Australian gold. Why not? Why not? So in terms of the volume of stock under construction, the number has fallen, but it still remains close to historically high levels. Here are six things to look out for in 2020 for new developments. Okay, 6 things to look out for, everyone. Get your stein. Let's get ready. Number 1. The first home buyer stimulus remains in place and additional stimulus has been added. Across each state and territory, some form of state government stimulus remains in place, and in most states the greatest benefits are for first home buyers that are building or purchasing brand new homes. Okay, this is the problem. I'm going to bring up a chart here to show everyone. I'll bring up a chart. Here's property prices since 2006. Look at that. Look how much they've gone up. Here's housing affordability as a ratio of price to income. And this data is only until 2012, but look how far it's gone up just in that range there. Why are we stimulating this sector? Why? Don't we want property prices to fall in order to make houses more affordable? Rather than stimulate a bubble? I know why people don't, because too many people have their wealth invested into property. The problem is 57% of our nation's wealth is tied up in housing. And what does that mean? That means that people aren't investing in businesses. That means people aren't buying $40,000 scanners like we did in our business and then started renting it out to create another business. It means people aren't employing people. They aren't taking risks. They're just flipping houses. They're flipping houses. Why start a business? Why, honestly, I should have just gotten flipping houses. But that's the issue. And frankly, negative gearing and the capital tax changes it's steering money into that direction. All of these things are interventions into the market, and it steers the money. It influences it. Even the cash rate influences it. That's the whole thing. All of this, it's all about influencing us one way or another to get the best outcome for the economy and keep stability. But I think it's going to be like Matrix and the Neo. You're going to have a big pop one day. With property prices now rising and borrowing capacities increasing due to lower mortgage rates, this should be positive for mortgage demand. Okay, well, let's just bring up this chart here. This is showing the red roots of the line. Unit price growth to the west compared to the east. So the growth in property prices isn't universal, guys. It's only in the upper quartiles. Posh places. At a federal government level, the first home loan deposit scheme will allow some buyers to enter home ownership even sooner, with the government covering the cost of lenders' mortgage insurance for purchasers with at least a 5% deposit. Now, that's only 10,000. If we look here at the building approval numbers, guys, that's less than 1 month's worth of, dwelling units. And that's for the whole year, 10,000. So I don't like the fact that the government is stepping in and guaranteeing these things. This just sounds way too similar to what's happened in the US. But fortunately, it's just a publicity stunt. I don't think it'll make that much difference. 2, large volume of stock remains under construction. The latest data to September 2019 showed nationally there were 59,426 houses and 140,349 units under construction. I mean, that's a huge amount. That's a huge amount. No wonder approvals are going down. Although the number of houses and units under construction has been trending lower recently, both remain much higher than the long-term and recent average levels. It'll be difficult for developers to have confidence in bringing anything new to the market when so much stock remains still under construction and yet to successfully settle. Well, yes. Yeah, no, he's making a good point there. There's a lot of stock on the market. There's a lot of stock still on the market. It's going to take a while for that all to filter through. And then if unemployment, which is, do I have it here? Unemployment, we trended down in November, and January we trended down again. I need to update this chart down to 5.1. But you look at the Roy Morgan data, it's gone up. So what's your poison? Settlement valuation issues are subsiding. In 2019, there was a lot of discussion about bank valuations of new housing projects coming in at prices below the contract price. See, this is the thing. You should have a clause in your contract that the final contract price is subject to the bank valuation, and then you can pull out of the contract if it's not within 1% of it, or below, or above. If the bank valuation is either above or 1% below, why not? Could you put that in there? Would they let you do that? Would you walk away if they refused to let you do that? While there are still likely to be some instances of this occurring, the rebound in buyer demand and property prices since the middle of 2019 should see a reduction in these situations in 2020. Not if you are buying units past the red rooster line. No, it won't. It's only in certain areas. Buyers are still likely to be cautious of high density. Yes, well, he's right on the money there. I mean, consumer confidence in multi-res has just been destroyed. I don't know why anyone would risk buying off the plan now. I've got no idea why people would do that. Someone was plugging that on LinkedIn. This is the thing. I share my videos on LinkedIn. I put them up there, and I see people like talking all this garbage, and they're just selling their own products, And I have to resist the urge to just dogpile onto them. I have to. I probably don't do LinkedIn properly, guys. Not enough ass kicking and social justicing and virtue signaling. It's just turned into a lot of crap for me. But anyway, unfortunately, 2019's theme of dangerous cladding, structural defects, poor valuation are expected to roll over into 2020 and may lead to buyer caution. I think it's going to be for the next 5 years that people are going to be cautious of this. This is not to say that these issues can't be overcome, and it's likely that reputable developers with strong track records of quality developments will be best placed to capitalize. Yes, but you need to really do your research, because it's very easy to put a glossy marketing brochure together, but finding out reality may be a bit different. The long lead times between contract and completion may provide concern for some buyers, given market conditions at the time of purchase can be quite different to those at settlement. Developers will need to provide potential buyers with a level of confidence that what they are paying for now will hold its value at the time of completion. Or you just wait. Or you just wait for it to be completed. You don't get emotionally attached. There's hundreds, tens of thousands of these things available. You just wait. Cladding and structural issues prevalent in some buildings will potentially cause caution amongst buyers of new property. Again, developers with a good track record of delivering quality products will be best placed in the current market. I don't know. I think developers need to start looking at a dual certification system, having multiple certifiers that actually have the ability to ping the developer if they're doing it dodgy. I think the issue is with the design and construct methodology for apartments that people live in, where cost cutting can just get swept under the rug. I think all of the government's attempts to try and police this are going to pretty much fail, to be honest. And your best bet is to not buy off the plan, to wait to see the finished product, and to talk to people who are already living there. You know, what does that hurt if you have to spend another 20, 30 grand on an apartment if you wait a year, but you know you've got no defects? What would you rather? An unexpected increase in land and house and land sales. The aspiration for most Australians is to own their own homes. Is likely to see demand for land and house and land properties rise again in 2020. The expected increase in demand is due to the broader increase in property prices, along with currently limited supply of established properties. While demand in this sector is expected to rise, buyers are becoming better educated about the need to purchase properties with access to amenities such as parks, shops, and transports. Well, isn't that common sense? But okay. Affordability challenges for new properties are likely to continue. In most instances, new housing, whether it be house and land or apartments, experience a price premium compared to existing properties. So buy existing properties, everyone. Buy a fixer-upper. While the first homeowner grants are being offered by individual state governments account for this premium in some respects. No, they don't. They inflate the price, so it doesn't account for the premium. That's a fallacy there you're making, mate. For first home buyers, at least, developers are expected to still have some challenges demonstrating the benefits in paying a premium for brand new properties. This is especially the case as home buyers become savvier and have more access to more research tools to determine the differences in pricing between not just different new developments, but between new and existing properties. So some interesting insights into what to expect from property in 2020. What do you think, everyone? Do you think he's on the money? What about the large volume of stock there? Is that going to flow through to the construction industry? We saw in the PCI that construction still is declining. And I mean, we look here, job ads are just down. Guys, they're trending down. Building approvals are trending down. I'll need to get some updated figures here. I don't think they haven't been released yet. They'll be coming out soon, but it's not looking good. So it's going to be an interesting year. I question the constant reference to price growth in the property sector. I think it hasn't been uniform. So to act as it is uniform, as they seem to be doing in all these articles, I think is a little disingenuous. Let me know your thoughts and opinions. I'll jump back to me. Your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe. If you're a fan of the channel and want to help us that little bit extra, we have a Patreon where you can make a small monthly donation. You can also join the channel here on YouTube, where you get access to emojis and badges. We have affiliate links with Independent Reserve for your crypto trading, Amazon and eBay for your consumer purchases. We sell pocket squares, merchandise we hand make right here in Brisbane on our website. And finally, PayPal if you want to contribute that way. Thank you to everyone who's helped support the channel. Take care, and I will see you in the next video. Bye for now.